And as she said, I'm a independent journalist, and today we're going to talk about mining. And before we start, why don't we just have our three panelists go and give themselves a quick introduction.
Hi, my name is Leo. I work at Iterator Capital. We are a large-scale mining operation based in New York and China.
Hi, my name is David Vorik, and I run an ASIC manufacturing company that started in June 2017.
Hi, my name's Devin Blitzer. I'm part of a company called BYO Bitcoin, and we do large-scale mining operations in West Texas.
Okay, cool. So, tough questions on mining. Let's see. So, what do you guys think of, let's talk about the Bitmain IPO and how that's influenced mining. What do you think that has to do with the profitability of mining now that we have, for example, Bitmain doing, I think they have about 50% or sometimes over 51% of the hash rate on different days? Anybody want to talk about that? Is it right? Over 51%?
So the numbers, the amount of hash rate that Bitmain has is often hard to track down because of their use of shell companies and partner companies that don't necessarily fall directly under the Bitmain umbrella. But if you look at how much hash rate Bitmain directly mines, according to their own published numbers, it's something like 5%, which isn't that scary, although I think most people in the ecosystem don't believe those numbers. First of all, because it is known that they use shell companies and partner companies with like kickbacks and such, and so effectively they do control much more hash rate, but also everything about their IPO has been very slimy. There's been, misinformation on all sides, and so there's just no reason to trust many of the numbers they put out anymore.
Oh, so you're saying, David, that you think they have more than 50% of the hash rate?
I'm saying I think they have more than 5% of the hash rate, and I believe
more
that
than 5% of the hash rate? Wait,
5% is what they publicly claim they have.
So what he's talking about is their miners that they own. Is that correct?
Yes, the miners that they actively operate.
So I think you're referring to how many miners that they sell that are owned in the marketplace. Is that correct?
No, not miners. I mean, Bitmain has
how many miners?
BTC.com and Antpool, right?
Yes.
And via BTC. Did I say that right? So on any given day, from what I understood, that they have more than 50% of the hash rate of the Bitcoin hash rate. Is that correct?
So they have a majority in terms of the miners that they sell and the hash rate of Bitcoin coming mainly from Bitmain Antminers. He was referring to that 5% of the hash rate is with their personal miners, which means that they build out their own facilities. They have a couple hundred megawatts, which is a couple 100,000 miners running, which in terms of the hash rate is considered a large portion. But yes, Bitmain owns they pretty much are a monopoly on the industry in terms of ASIC mining, and they are a big player, and they've had a huge influence on the profitability of mining cryptocurrencies like Bitcoin, Litecoin, Dash. And so they definitely are, I wouldn't say to blame, but they have a direct influence on the profitability of mining cryptocurrency.
Do you mean in terms of other companies or entities being able to get into the system? Because Bitcoin started off where anybody could mine it at home, right?
Yes, so the future of mining is very promising. What you've seen, though, in the times that mining has been blowing up and becoming very popular is through selling Antminers. So Bitmain has entered the market very early, and what we're seeing is a lot of other companies in different countries, not just China, are starting to compete and try and bring on the same level of performance and hardware that Bitmain has to offer. So the future of mining companies, I don't believe, is going to be more so monopoly that Bitmain has been able to create. There's going to be a lot more marketplace for options and better customer service, and also less manipulation by a single company on the profitability of mining.
Why is that? Why do you say that? Go ahead.
And worth pointing out that a wave of new manufacturers are already starting to compete against Bitmain.
Yes.
So we have Silicon, we have WhatsMine. It's hard to determine if Silicon is necessarily better than Bitmain in terms of business ethics, but in terms of technology, there are definitely a new wave of competing manufacturers are starting to capture more and more market share.
So to kind of touch on him and the Bitmain's influence is that mining, right? When a year ago, these miners were $2,300, and you're mining X amount of Bitcoin. What Bitmain did was they flooded the market. So they flooded the market with hardware that is you're able to hook up a lot of hash rate to. So what that did was they were able to sell a lot of miners for very cheap and outbeat their competitors. And this allowed a lot of actual hardware servers to be out in the marketplace, which is the reason why the hash rate has spiked out so much. What they could have done, right? What would have been the more so, I wouldn't say moral, but of course they're a business. They've done very successful in terms of over the course of the company, but they created an easier barrier to entry because of the price, and it's not considered them selling a security because they can't call it that, but you're actually buying into something that you believe in as an investment and will bring you in the Bitcoin. So they have that's more so how they have affected the industry and the hash rate and being able to outperform their competitors and have a majority of the marketplace like she was referring to at the very beginning.
So as we know that the Bitcoin, the electricity required to run Bitcoin is now, I guess, at equivalent to an entire country. Ireland, depending on who you talk to, which country. But can you tell us about that? And does anybody want to comment on that?
Sure.
That's what's required to keep the system secure and keep it going?
So Bitcoin is an industrial application with industrial needs. And when you look at other industries such as just general purpose manufacturing or something like aluminum smelting, you find that the amount of electricity consumed by these industries dwarfs, even today, dwarfs what Bitcoin does. And so I think it's not, it's an interesting comparison to say, oh, Bitcoin miners consume all electricity than Ireland. I don't know if that's the specific country that Bitcoin has passed. But I don't think it's apples to apples comparison because most electricity in the world is not consumed by the 7 billion people in their homes. It's consumed by industrial processes that supply either things like aluminum foil or more likely things like cars.
What Apple are you comparing it to, David?
Yeah, I would compare it to other industrial processes like aluminum. And as I said, like Bitcoin electricity consumption is dwarfed by things like aluminum smelting.
That's an interesting comparison.
And also, I think the inherent question here is, what's the alternative? Like, it would be nice if we can just run a perpetual motion machine, that just floats in the cloud and run itself without consuming any electricity. But I think the power consumption of this kind of cryptocurrency systems, it's an easy target to pick on, but it is what it is.
Right. Okay. You had a comment. Devin.
So with your concern, or you're bringing up the 1%, right? I believe that, of course, the value of Bitcoin, right, in long-term plays is the cost that it takes to mine a Bitcoin. Bitcoin has, of course, is a cryptocurrency, but I view it more as a form of a commodity that you hold on to for the long term, because most coins, for efficiency purposes moving forward, cannot be proof of work. So that's why you're seeing most coins that are coming out are proof of stake. And of course there's proof of work, but what you're going to see is that there's going to be only a couple currencies that are going to be successful that you will want to mine that will be considered a profitable investment in the future. Now, with that being said, I believe that 1% will grow, but it will stick to only a couple cryptocurrencies to mine. And what you will see is in the future also, the concern of how much cryptocurrency consumes will diminish because over time technology with solar will increase, and it will get to the point where we are able to be 100% renewable. And that will be a great day to be able to have that issue solved and also be able to have a great technology and currencies such as Bitcoin.
So that's interesting, Devin. You're saying that we shouldn't really focus too much on the energy consumption of Bitcoin today because we'll eventually have renewable energy sources that will come in and replace that.
Yes, one of the big difficulties is the upfront capital for solar, and also the real estate that you need for you to get megawatts of power for solar compared to natural gas or coal. You're seeing a lot less upfront capital, and you're seeing a lot less real estate that's needed too.
Okay. So what happens to Bitcoin mining, for example, with mining in general, proof of work mining, for example, if Ethereum switches to its current consensus platform to, say, Casper? What happens to the profitability of mining? David, you want to?
Sure. So if Ethereum switches away from proof of work, basically you have this $2 billion a year currently propping up the mining industry that disappears. And so what you see there is this big crunch. And that doesn't kill mining. As long as there are block rewards, as long as there's money to be made by mining, no one's going to just leave that money on the ground. Someone's going to be there to pick it up. And I think a lot of the stress that a lot of the mining industry is seeing right now is just a result of competition. It's not that mining is dying, it's that people who used to be competitive are no longer competitive for one of many reasons. And so essentially Ethereum leaving mining would be a big pressure, one, on the GPU industry, because last year you couldn't buy graphics cards for video gaming because they were all pointed at Ethereum mining. That would change. You would see this like big release of GPUs back into the market. I think GPU prices would fall substantially. But then as a second component is that all that electricity powering those GPUs would also become available again. Those mining farms would have to be filled with some other hardware. And that would put a lot of competitive stress on the mining ecosystem and potentially put a lot of ill-prepared companies out of business, especially ones who aren't sitting on enough cash to make it through, a big downturn.
Mm.
Yeah, and obviously this has to contingent upon pure proof of stake actually works, which is a completely different set of problems.
Some projects use a combination of proof of stake and proof of work, and I think Casper is that as well, right?
Yes, and actually Decred as well. So I think it's sooner or later people need to realize that proof of work and proof of stake are actually on different abstraction layers. So proof of work is what actually makes the consensus mechanism Sybil resistant, and proof of stake, on the other hand, as far as we know, is not entirely secure for forming consensus, but it's a much more liquid way to distribute authority, right, voting rights. So actually laying proof of stake on top of proof of work as a mechanism to pay the full node operators is a pretty nice alternative to have benefits of both. And also I want to touch on a point I made earlier, that in the future, in the long run, that there will be fewer and fewer proof of work chains that become successful. I do absolutely agree with that. I think the industrialization of proof of work makes it naturally benefit from economy of scale. I think in the future, when we see, once this industry becomes more mature, knock on wood, this is actually not wooden, sorry. We'll see new chains that will latch on these already highly sophisticated, highly established proof of work systems. I think we'll see more proof of burn. We'll see more proof of stake whose consensus is attached to to Bitcoin's proof of work. We'll see more system like that.
Also, first off, this is wood.
Yeah,
We're
that's
good?
wood.
Blind.
No, I'm kidding. Second, I am in full support of Ethereum moving to proof of stake. The reason being is Ethereum should not be proof of work. It should not be mined. The reason being is that Ethereum has an actual application purpose. It's not considered more a currency or a commodity. It has an actual application, and there's no need to have to pay a substantial amount of money to be able to run that network to keep that application alive. So the coins that you'll see that will be mined coins moving forward in the future, like Bitcoin, what you will see is that those are ones that some of them will be considered more so you hold on to. Some of them will be considered you go and you buy a pack of gum. But a project like Ethereum, there's not an appropriate reason why it would not move to proof of stake, and the benefits of Ethereum project moving in that direction.
What's the big thing miners are focused on these days? What's the most profitable?
Bitcoin.
Still Bitcoin?
Yeah, I mean, Bitcoin, something like, even with the price collapse, mining something like $4 billion a year for Bitcoin, and if you add up all the other coins combined, it's like 1.
What's the second and third most profitable then?
I mean, generally, you can just go down the market cap, coinmarketcap.com. So it'd be Bitcoin's number 1, Ethereum's number 2. I think number 3 is Zcash, and that's because they have high inflation. They have a generous issuance. Then somewhere in there, you get Litecoin and Monero. Then you get Dash, and then
Decred.
I think we're down to Decred and Sia, and then below that, there's not so much happening.
David, I have a question for you. Now, you know a thing or two about mining because you started creating your own ASIC. Do you want to tell us about that, Obelisk?
Yeah. So I'm a coin developer, first and foremost. I made SiaCoin, which is a decentralized cloud storage platform. And as a coin developer, one of the things that was super frustrating to me was the incredible opacity of the mining industry. And then beyond that, it was also, it wasn't just an opaque industry. At the time that Obelisk started, 2017, it was manifestly parasitic and malicious, and it was kind of like this coin devs versus miners thing going on, especially in Bitcoin. And so I wanted to understand more about the dynamics of the mining industry, and I think that running Obelisk has really helped us understand, the economics of mining. How much do you have to spend on silicon? How much do you have to spend on printed circuit boards? How much did we spend on silicon? So our first run of miners, we spent, including R&D, about 65%, I want to say, on...
How many million?
How many million?
I want to say 22 million, is that?
So 22 million was the size of the whole project. I don't think I'm at liberty to share too many more numbers yet.
Okay.
Well, but we intend to put those out at some point.
I find that interesting because I know when I looked at the Bitmain IPO, and you guys can tell me if this is correct, that I think that they lost $500 million, $500 million, trying to create some ASICs that didn't work out. So it sounds like it's an incredibly risky thing to go into. That's not your core business, right?
It's Obelisk's core business. And Bitmain did something incredibly aggressive. So generally, when you make silicon, you go through several phases. The first phase is you design the chip. The second phase is you test the chip. You do what's called an MPW, or like a shuttle run of your chip. You get a small number of, you pay $1 million or $2 million. You get a small number of chips back, and you test if they work. And then you jump into production, and you make $500 million worth of chips. What Bitmain did was they're like, that's too long. If we do a shuttle run, our miner's going to be 6 months later to market or 4 months later to market than it would be. They're like, just go ahead and make $500 million of wafers. Now, normally, if your chip has 1 or 2 small mistakes in it, you can do what's called a metal spin. You can fix your wafers, and you can salvage that $500 million. What apparently happened to Bitmain, and again, this isn't public, but you can infer it from the fact that they lost $500 million in wafers. What apparently happened is they couldn't fix their, whatever issue their chip had couldn't be fixed by redrawing some of the circuit lines, which is what a metal spin allows you to do. There was a more fundamental error, and because of that more fundamental error, they just had to throw everything away, which, again, that's really not standard in the industry. Usually you are more careful than that, and I would say it's very rare for a production round of wafers to be completely trashed.
Does anybody have a comment on that? Leo, you look like you were thinking about something for a minute.
Yeah, well, so we know Bitmain failed at taping out 10 nanometer, 12 nanometer, and 16 nanometer. That cost them a lot of money.
Right.
Yeah.
So getting back to this idea of proof of work mining has become so industrialized, right? How do we bring? What are your thoughts on that? There's no way for me to get into mining, right? How does it become competitive again?
So
Is there any
you can't
hope
say
of it?
my company and a lot of other companies, and it's not considered a secure. You can't call it a security, and you can't call it an investment. That's you to decide. We can't advertise it, but we all know that you're buying a miner with the intention of making a profit. And what you're going to see is that the hash rate is going to be more level and consistent. It's not going to spike as much. There's going to be, of course, a higher level, a barrier to entry in building out your facilities and your data centers, but you will be able to, I believe, buy a miner with expecting an actual profit, but your ROI will be a lot longer. It won't be a month.
But is that like I was asking about, bringing more people into mining, that it's become industrialized?
Yes.
There's no chance of me, at home being able to participate as a miner, right?
Yeah, yeah. So you wouldn't have it in your home, but you would go with people like us who have these data centers, who spent millions of dollars on the infrastructure, and you know that as Bitcoin stabilizes over time, that if you buy a miner for X amount, and you're going to make, over the course of 2 years, that'll be your ROI, but you believe in the stability of the long run, and it actually makes sense to be profitable with this via actually buying the crypto on exchanges. Right now, that's something that will eventually be differentiated with, where there's two options that make sense: being able to buy on an exchange and being able to buy miners at any point in a bear market or a bull market. You're able to do one or the other without having to switch between how the industry is at that specific given point.
So on the topic of, David, you wanted to say something, or?
Yeah, just like any industry, you can't, anything that becomes professionalized has, money at the end of it, and substantial amounts of money inevitably becomes out of reach of the individual. And I think it's fair to say, it's even mining Bitcoin profitably is out of reach of Jihan Wu, the individual. He can't do it himself. He needs an entire company to get that going. And I think that, it's the same thing if you want to make GPUs. It's the same thing if you want to make chairs. As an individual, you can't competitively make chairs, especially if your competition is other mass producers of chairs. And so I think that that's just a natural consequence, and we're seeing this in GPU mining too. So it's not just ASICs to blame. Like in GPU mining, there are GPU farms set up, in parts of the world where they're seeing 2-cent electricity. Home miners, even though you have access to the exact same hardware, can't compete on GPU mine networks the same way that industrial companies can. And I think that's just that is the end game for mining. I think that any sort of proof of work, any sort of spending money to make money is going to result in the individual being unable to compete.
Well, that sounds kind of grim.
Well, I wouldn't say at an industrial level compete, but me being an industrial player, having actual data centers, it's people like you that keep my business alive. There's people like you that buy one rig, one miner, or 100, or a couple thousand. So you will always be involved with my business, but you will, of course, there's a higher barrier to entry to be able to consider competing with the co-location business that I specifically do, which is essentially lease you out power and space at a very reasonable price compared to home, because we buy the energy in bulk, and our business model is directed specifically at providing a successful experience for the customer. So you will always be involved with our companies,
So
but from competing, such as like being a huge industrial player, you trying to create an application and then Google or Amazon being able to do it way faster. Well, it's.
So you're like the AWS of mining.
I've been called. We've been told.
But now, David, also, I don't mean to pick on you. You have kind of an interesting, where I heard you're trying to fork the Sia to try to kind of push Bitmain.
Yeah.
So tell us about that.
So essentially, one thing that really irritates me about the mining community as a whole is most miners seem to believe that mining is free money. They believe that, there's this reward to be had. I make machines, I get the reward, and anything else that happens is fair game. And so we've seen many times over, we've seen it with Bitcoin, with Dash, we've seen it with Litecoin, we've seen it with Sia.
Are you going to tell us about the fork?
Yeah, I'm getting there. I'm getting there.
We got all day. These guys, maybe even all night. Sounds good. Keep it up.
Our miners were causing substantial collateral damage to our ecosystem. Our community was extremely unhappy with the sudden announcement of Bitmain. When InnoSilicon showed up, they started mining on 45% of the hash rate. That's self-mining. That's not hardware they shipped. That's hardware they kept. So InnoSilicon's own, under lock and key hardware was 45% of the network. That's extremely close to the threshold where InnoSilicon can arbitrarily attack the network, and that's not something as a community we were comfortable with. And InnoSilicon and Bitmain made it very clear through multiple communications with them that they're like, hey, mining is our right. Like, what do we get out of listening to you? And what do we get from being cooperative? We're sitting here making tons of money. What you're asking us to do would mean we make less money.
So you're going to fork the network so that Bitmain won't be able to mine Sia?
Yeah, and so we had to send a message. It's like, well, no, it's not free money. If you're going to be parasitic and awful, and we are a community, we're trying to achieve decentralized storage. We have very specific goals. If you're going to come in there in here into our turf using our money, taking our money, we're paying you to do the block reward. You're going to cause damage. We don't have to live with that. And so we said we're going to fork. We're gonna, InnoSilicon, you've lost the right to keep 45% of the hash rate. So as a community, we are moving to a new algorithm where your $20–30 million of hardware is worth zero. And so it's what do you get out of complying with our requests to be nice to our community? You get to keep your hardware. And so they lost that.
What would your response then be to somebody who said, well, okay, but now that forces people that want to mine on the network to buy Obelisk, right?
Yes.
Is that correct?
So Obelisk has been much more upstanding as
That's what you're invested in, though. So now that if it forces the miners to then buy your ASIC.
So we have to come back to the reason that Obelisk was created, which is that we looked in the mining industry and we said there is not a single good actor. There's not a single cryptocurrency-friendly player in the entire mining ecosystem. Obelisk, we felt, was the only choice. And you look at all the other mining players, there was no other alternative that actively chooses not to self-mine, actively chooses to disclose production schedule, actively chooses to disclose how much they're mining, how much they've produced, how much they've shipped, is actively enforcing, we're not going to let one buyer take 85% of the hash rate or 45% of the hash rate. We're going to cap buyers.
So, Devin, what do you...
To add on that,
Yeah.
He's 100% right. And one thing that would make Bitmain a good actor, one of the big things is to talk to the people of the projects, like SiaCoin, that they're trying to create miners for, actual hardware for it to mine, and make sure that they're okay with it and to go in an agreement instead of releasing it and pissing them off and them doing a fork and then $20 to $30 million worth of hardware is now worth nothing.
Okay. But does that make, but is that competitive though, or is that kind of, I mean, because you're putting miners in a situation where they don't have to buy the hardware from you, and they don't have, do they have other options?
So one thing we need to clear up is that InnoSilicon had the best hardware on our network. So effectively, if you wanted to compete on the
Do
SIA
I
network,
have to buy your hardware though to mine SIA?
before the fork, if you wanted to
no?
compete on the SIA network, your only option was InnoSilicon. We were under a monopoly situation, and it was a very shitty monopoly, if you pardon the language, but it was. It was a terrible monopoly, and nobody was happy with it.
Right. So, but
Under
now
this
it's-
new situation, yes, we have switched from a malevolent monopoly to a monopoly that has been open, transparent, and we hope will continue to be benevolent. However, if that changes, we have the power to once again make a change.
Leo, do you have a comment?
Well, I think it is what it is, and this thing has already happened, and I think it's very difficult to turn back. I think what I sincerely hope for a side project going forward is that it can work on attracting more developers and make the product itself more robust.
So when you think about it, the cryptocurrency industry is going to be around long after we're gone. I mean, the last Bitcoin is not even going to be in this century. So you have to consider how early on we are in this process in cryptocurrency in general. And as this being a mining panel, all these hardships that these great projects or these bad projects are getting themselves into, and how it affects the industry as a whole, and how it affects the investor and everyone involved.
Okay. Well, just before we turn it over to Q&A, I have one more question, and then we'll let all you guys come up. And what's going to happen with the halving? I mean, if and maybe Leo can start.
Yeah,
What is going to happen with the halving, and what do you say when, after looking at the Bitmain IPO, there were some indications that maybe mining isn't as profitable as a business as it was after, Bitcoin has gone from a peak of, let's say, $20,000 to where is it now, but it's fallen like 70% since December, mid-December, and with halving coming up in 2020, how, in general, what are your thoughts on that? How are we going to?
Yeah, so I think mining profitability, like all market activities, is cyclic. And this cycle is particularly difficult to measure because it has several different things that factor in. One is the hardware cycle, right, which inherently moves slower than capital markets cycle. So the combination of both is what determines mining profitability. So I think in the past year or so, we have gone through the experience of mining was incredibly profitable to mining is in the worst possible scenario where difficulty continue to grow and price continues to go down. Right, this combination is worst for miners, but that will change. I think very soon, if assuming price continues to trend down or price continue to stabilize at this lower range, I think difficulty will not grow as quickly as before. So to answer your question, I think Bitcoin mining profitability is not necessarily changing inherently, but it's definitely getting more competitive. And with halving, I think that is another milestone that pushes the competitiveness of running this operation to a next level. Because what you have to optimize on, you have to be incredibly careful with every step of the way, from your power cost to your data center. You have to get a squeeze from every single step of the operation.
Okay.
So I'm not worried about the halving, and neither should you be. The reason being is because technology gets better, and the current mining technology right now will be obsolete by 2020. You have Bitmain, who's already released the efficiency of their next miner, which is twice as efficient. So say, for instance, the halving were to come out today, and it would go to 6.25 Bitcoin, and the new S11 came out that was 29 terahash and still the same amount of 1.4 kilowatts. Well, in that scenario, you would be mining exactly the same amount that you're mining today. So what you see is that it will always catch up. And we are in a stage where it's very up and down, and everyone will become very informed and very knowledgeable about this industry as a whole as we progress. And you will see decades and decades to come the whole maturity of this process.
Oh, so you're saying essentially, fear not.
Yeah, don't.
Fear not.
It's just all. It's all part of. It's all. Everyone
It only
wishes they
gets
were there in
better.
2009,
We'll have
but the
more.
fact that you're here today means that you still have an opportunity to be very involved in the early steps of this, and to be at the forefront of something.
And we'll have better
It's huge,
ASICs
which all
and-
y'all know.
And renewable energy and,
Yeah.
and all good stuff. So we should open it up to questions for the audience. And if you come up here, I'll put this microphone over there.
What's up, guys? I'm not looking for the secret sauce or anything like that. You don't have to give me numbers. Just curious, if I walked into each one of your mines right now and I looked around, what percentage of each algo, or what, you know, I'm 50% S9, you know, that kind of thing, what does your mines look like currently? And where do you want them to be, or what miner are you looking forward to in the coming years, or coming 3 months, if you will, because years is funny at this point.
It's definitely funny. So I definitely can't tell you the percentage, because we still have a fiduciary duty to our LPs, right? But I think, you know, to continue our conversation from yesterday, I think there is still a role for GPU to play in speculative mining, and as far as in terms of where I think this is going, I think at this point we're going to see more interesting opportunities back in the States. One, I think the tariff is going to stop a lot of Chinese miners coming to the U.S. Right, so I think there's a huge opportunity for U.S. domestic manufactured machines. So whoever, you know, make that happen first, I think will have a big, because power in U.S. is great. And mining in China actually has gotten so saturated. The average price is already pretty high at this point. You can definitely find cheaper price in U.S. everywhere. So that is what I'm most excited about.
So in our mining farm data center, I'll tell you, we have no GPU rigs. We have a majority S9s, Bitcoins. We have some Litecoin. We have some Dash, some Decred. The reason why we don't do GPU mining is because it's not as profitable, and your efficiency, your PUE is a lot higher. What that means is your efficiency from the amount of kilowatts per miner that you're using and the amount of mechanical usage that you need. What that mechanical means is you have chillers, you have evaporative cooling, and that allows you to keep your miners at around a cool 60 to 70 or 70 to 80 degrees for your cards. Where Bitcoin, of course, Bitcoin miners, ASICs, can run up to 95 degrees. Now, there is, of course, what you have where I won't go into too much detail, but you rather have a variance of 70 to 80 degrees than from 50 to 90 or 50 to 70, because the more variance in the temperature is going to hurt the miner even more, which brings into good engineering practice to keep it around the same temperature. But one of the big reasons why you don't do GPU mining is, one, you're not mining as much, you're not mining as much profitability, and you're spending more money on the mechanicals, which takes away more profitability from you being able to place more miners in that facility to take that power that otherwise you're using for chillers to cool down the facility.
Okay, ready for the next question?
Does that make sense?
Yeah, I've been mining now for probably about 5.5 years, so I've seen everything. So at least I think I have. I'd always thought it was rather odd how whenever the new mining equipment came out from Bitmain, it was always just barely profitable. Like you were going to crush it, right? So I started to actually go do some background. I'll get to the question in a minute. And I started to do some background, and it had appeared as if they had developed the equipment we're mining with equipment and then waiting to a certain point of profitability and then would do liquidation, otherwise now release for sale, because they're always doing the pre-sales. Currently experienced that with the X3 for Monero, because they thought they were going to get all their consumers by dumping all this trash equipment on them because of the fork of Monero. Only to find out that Electroneum and a couple others were still wildly profitable, still killing it. So the question is, do you see the industry following that business model? I mean, I appreciate what you're saying about your business. Do you see the ASIC miner continuing to follow the model of using their own equipment until barely profitable and then releasing?
Yeah, I mean, it's even worse than what you painted.
Is that happening?
Oh yeah. I believe
illegal in the
Bitmain
US.
and InnoSilicon both are notorious for
Really?
taking new equipment, mining it for 4 months, and then selling it, often as new. And they don't say new anywhere, but it's kind of assumed if you go on a website, you put an order in for the flagship product, you assume they're sending you new product, but that's very often not the case at all.
They had a rack number on it.
You can also test the chips and see its usage. That also, your question goes back to the idea of these mining companies, Bitmain and InnoSilicon, being good actors. Not only are they're pissing people like Sidecoin off, but they're also mining for themselves, and they're performing actions that otherwise would be considered illegal in countries like the U.S.
The reason they do this is because if you loosely equate a miner to a money printing machine, which loosely it is, why would you sell a money printing machine for less money than it's going to print? There are actually lots of situations where it does make sense to do that, and it's more profitable to do that. And that's actually one of the reasons that Obelisk, our company, has taken the stance, we will not mine our own equipment, except for we will mine enough of it to test it, to operate it, to like understand it, make sure it's working. But that doesn't mean we're going to go and mine on a third of the stuff. We'll ship you new equipment, not the stuff that we're mining. But it is untested whether or not that, we think that will improve relations. We think that's a very long-term strategy. And our thesis is that will be more successful. That thesis has not been proven out in practice. We don't have a successful mining company that we can point at that has taken the high road yet. But I do believe that the high road will, in the long run, be more profitable.
Okay, we're getting close to the end of our time here, so everybody answered that question? Are we ready for the next question? Next question.
So you mentioned that you believe that the life of a miner will go longer than what it is now. You're fighting against Moore's law, where every time you're getting more and more effective or efficient miners. So for example, and this is for Obelisk, I started mining Sia with GPUs, and then I bought an A3, which made my GPUs obsolete, and now the fork is coming, which made my it's going to be like A3 obsolete.
Yeah.
For Obelisk, are you going to be, are you going to try to keep it more constant? Since now you're a monopoly, you have pretty good control of it. Are you going to try to keep kind of like the efficiency of the miners sort of a constant, or are you going to be following the same, keep making obsolete your previous ones too?
Good question.
So, first of all, with all due respect, I am sorry for breaking your A3. We understand that there is collateral damage to that, and we do take that seriously.
Discount.
I will also point out,
as long as they ship them on time, which they haven't yet.
your A3 was not profitable anyway due to InnoSilicon's jumping the hash rate. Yes, on one hand we broke your A3, on the other hand your A3 was already broken. With regards to Obelisk, we received so much heat for the conflict of interest that we have opted, we will never be making Sia equipment again. At least our position currently is that we will not make Sia equipment again, and the reason is because the conflict of interest is, I can't tell you how difficult it is to wake up every morning to messages accusing me of lining my pockets when Obelisk is potentially going to lose money on the fork. And it may, if we continue to sell machines, that won't be the case. We will make money. But it's not straightforward. So we've actually started working with other companies in the mining industry who historically, they aren't names that are active, they aren't the big names right now, but historically have acted very ethically. And so we've been working with them to be the, I guess, the fallback. So if InnoSilicon shows up again with ASICs that can mine our new algorithm, and then they just turn around and be malicious a second time, rather than fall back to Obelisk where that conflict of interest exists, we will fall back to another company whose name is not yet disclosed, but then conflict of interest is not there. We don't own anything in that company. We won't be buying those miners. We will, as developers, make sure that we can make a decision without a money problem hanging over us, and also we can represent to the community that our decision came independent of the money.
All right, we have time now for one more really quick question. Really quick question, really quick answers.
Okay, so the Chinese miners are trying to IPO. Okay, why in your minds are they trying to IPO? And if they get the money, what are they going to do with it?
Thank you for asking that question. That's a really good question.
Yeah, so as far as we know, Bitmain, Canaan, and MicroBT potentially are lining up for IPO, and eBay. I think the obviously is to replenish the war chest, to have, and this is a tough time for both miners and also manufacturers themselves.
War chest of machines?
No, like money. Sorry.
Oh, okay, go ahead.
So having with Bitmain, it's obvious, right? Like you want this is the peak time to do it, because they only disclose, if I remember correctly, Q1 and unaudited Q2 results, and Q3 result is not in their IPO filing. And which we expect to look very different from their Q1, Q2 result. So this is the best time to do it, the short answer is, because the market still has a very high anticipation of the performance of these companies, and also traditional traditional equity markets still don't fully understand this market enough yet to find this interesting.
I mean, why does any company IPO? They raise money, right? And like he was touching up on, this is the perfect time. As you see now, if you go on Bitmain's website, you see the miners for a couple $100. At one point, they were over 2,000 and sold out. What that means is that at the peak of this, their revenue stream from 2017 was extremely higher than what you're seeing today. Even if they were selling the same amount of miners, which are not, they're selling less. They're also selling it at a way cheaper price. So this is the perfect time for them to be able to IPO with a high number. They don't care what happens to the stock after, because they've raised so much money, and this is the time where Bitmain's name is still the big dog and the one where everyone wants to be a part of the hype, whether or not it jumps up and goes down or not. Bitmain doesn't care. They know that it's very ruthless, and it's a very good move on their end to decide to accept money, and then immediately right after that do an IPO while they're predicting that they're going to have a huge decline.
So they're just looking for a bigger fool.
Ooh.
Of course.
With the IPO. All right, thank you.
Okay, so what do we have, 2 minutes left? Okay, 2 minutes left.
Okay, my question is a little bit off there. You guys are traditional miners, mining for a while. I started mining also in 2010. But like, I own a software company, and I have been leveraging my users to mine for a while now. And why I don't see more companies doing that? Like instead of building new hardware and investing that better, why we're not leveraging all the hardware that is out there already with millions and millions of users, like you're doing with Sia, with storage. Why not do that with GPU?
That is actually a mischaracterization of what we're doing with Sia. So our belief, this is our thesis both on the storage side and the compute side, is that industrialization will be so effective at increasing efficiency that general purpose hardware, both hard drives on people's machines and CPUs on people's machines, will be made impractical to use, even if they're free to the user. And so we've actually, On the mining side, if you have a CPU, even the algorithms that try as best as possible to be CPU friendly, the amount of electricity you spend running your CPU is more than the amount of money you make because of industrial scale miners who have cheaper electricity and more efficient hardware. And so on the storage side, it's the same thing. A hard drive on your laptop, if you're using that and serving data to the SIA network, the amount of money you're making is like 50 cents a month, 75 cents a month. And you have to keep your laptop up 98% of the time. So your laptop has to be running basically all the time. That's just not worth it to your average.
But like my question is a little bit different. That like let me use my example, right? I have a 3D software company. I make CAD software for designers, for engineers, right? Usually they pay $2,000 for a software like this, right? I give that software for them for free, so they can use for free. In exchange, they allow me to use their hardware to mine. So I am mining their devices without paying energy or hardware costs, and I can get a lot of like thousands of users to do that for me. Why I'm not seeing anyone else doing that right now? Like that's just a curious question.
Do you mind? I'm starting to understand what you say.
You've got 30 seconds, Devin.
I think that if you can rephrase that, we can talk over here. Would love for you to kind of explain more about your business and how that relates to your question about the mining industry and why certain practices haven't been taken.
Yeah, we can talk.
We're going to have to take the rest, outside. But thank you all for coming, and a big hand to our panelists. Thank you all so much. Great job. That was a great panel. Thank you.